Hey traders, welcome back to another video. In this video, we're going to talk about this advanced supply and demand scalping trading strategy that you can use in order to make very high risk to reward ratio trades in scalping without risking a lot of money. And by the end of this video, I can assure you that if you apply this strategy as I teach you or as I show you in this video in the live example, then I can assure you that you will end up making some profit. So now, without any further ado, let's get started. So the first thing is, in this strategy, we're going to use two things. We are going to do the technical analysis based on chart patterns, and then we're going to go ahead and trade those supply and demand zones. Now there's a specific sequence and specific way you have to follow these instructions as I show you in this video, and the instructions are here. So I'm gonna read these instructions one by one, and you can also take a screenshot of this screen to keep it as a reminder of how this strategy works. So here, the first thing is we should find a chart pattern on a higher time frame, like 4-hour, 6-hour, 8-hour time frame. And at those time frames, whenever we find a chart pattern, that chart pattern would give us some levels that we can use at lower time frames. So in the first step, we're going to find a chart pattern at a higher time frame like this 4-hour. And then the second step is to highlight the price target and invalidation level. So based on the chart pattern that we find in our higher time frame, because every chart pattern or every tradable chart pattern has some invalidation or stop loss level and a target price or a target level that we can use. For example, if we take example of the flag pattern, then in the flag pattern it looks like this, and in this flag pattern the target that we want to achieve is at the level where the height or number of pips within this stick of this fib. So we'll copy the same thing and then just check that and make our target here. So the number of pips in this start and end of this stick of this flag is what we are going to target after the breakout from this flag pattern. And this is the same thing that we're going to use or do in this video as well. So we're going to highlight our price targets and invalidation levels in the second step. Then we're going to go ahead and switch to lower time frame like 5-minute or 15-minute, and after that we're going to trade the supply and demand zones in the direction of the pattern that we have found. Now I know it might not be making a lot of sense to you since I'm just reading this out, but bear with me because I'm going to show you live how you can trade this strategy. So another thing you have to keep in mind is, for bullish chart patterns, we are only going to take the demand zones in our trading, and for bearish chart patterns we are going to trade only supply zones because we want to trade in the direction of trend, not against it. Now enough talk, let's go ahead and see things in action. So first thing we're going to do is we are going to look for a chart pattern, and here you can see that there is the formation of this bullish flag chart pattern, because the chart pattern starts here from this wave here, and then here's the stick, and then here's the flag. So this chart pattern is a bullish flag chart pattern. Now as I said, what we need to do is we need to the first step is to identify a chart pattern at a higher time frame, and then the second step is to highlight the target and invalidation level. So in this case, whenever we find a flag pattern, our target is the same number of pips as there are in the first stick of the flag. So we're gonna take this and we're gonna put it here. So this level here is going to be our target level. So we're gonna mark this level as our target, and then our invalidation level is going to be where the where the price breakouts from the lower end of this flag. So our invalidation level would be here. So now we have marked our invalidation and target levels for this pattern. We are not going to trade this pattern at this time frame. So we have found this at 4-hour time frame, and to trade this we're going to go towards the lower time frame, and that lower time frame could be anything like 5-minute or 15-minute time frame. So I'm just gonna go to the 5-minute time frame, and here I can zoom in to see how the price action is going on. And now what we need to do is we have to look out for either the breakout or the invalidation, because if the breakout happens in the bullish direction, then that would mean we are going to trade this chart pattern. But if the price hits this invalidation level first, then this pattern would not be valid anymore. So I'm just going to go ahead and play the market, and here we can see the market broke out of this flag pattern with this very impulsive bullish candle, and you can see the clear domination of buyers in this region here. So this indicates that the market is in very good bullish momentum, and the breakout from this top end of this bullish flag pattern is in the upward direction, and we are going to take the trades that according to our strategy. So our strategy was to identify the breakout and then trade in the direction of the trend. So now, since this is a bullish flag pattern, and for bullish chart patterns we are going to take the demand zones only. So now let me just go ahead and apply our supply and demand indicator, and once the indicator is applied, it would show us all the supply and demand zones forming on the chart. Now if we just play the market, so here you can see the formation of this drop base rally demand zone. And if I just move the market till here, so as you can see right at the next candle after the formation of this demand zone, we know that there is a formation of this demand zone. What we would do is now we would take this trade, we would trade this demand zone, we would put our entry at the high of this demand zone, and we would put our stop loss at the low of this demand zone. And if we move 2 to 3 candles, we can see the orders of this demand zone are picked at this candle, and all we have to do is now break even the trade first and then wait for the market to hit our target that we have set. So what we're gonna do is we're gonna first break even the trade, and as you can see the 1-to-1 risk to our ratio is met on the same candle on which the order were picked. So we would break even this trade, move our stop loss from this low of this demand zone to its high, and then adjust our take profit, or we would leave our take profit to be open, and we would close this trade manually once the price hits our target that is here. So now let me just go ahead and play the market. Now one thing you have to keep in mind while trading this type of scalping region is you have to be patient. And as you can see, there's a further formation of other demand zones within the pattern. So what we're going to do is we're going to ignore these. As long as we already have one trade open in the bullish direction, we're going to ignore all other demand zones that form after the first one. But if our demand zone, this demand zone had closed somewhere here, or it had become invalidated, and if there's a formation of another demand zone, then we would take this trade. But as long as our demand zone or our trade is open, we will not take any other trade while one trade is open. So let me just go ahead and mark our stop loss and take profit levels, and we're going to take long position. We're going to set our take profit to this level here. Let me just go ahead and move our take profit from here to here. Now you might be thinking that this take profit is very high. Like as you can see, the risk to raw ratio is 125 almost, which is crazy. But one thing you have to keep in mind while trading this, as I was saying, is you have to be patient, because price is going to move a lot in either in your direction or against you. So once your trade is open, let it complete, do not interfere, because if you let your psychology get over your nerves, then you might end up not hitting your take profit level. So let me just go ahead and play the market, and here let's just wait for market to conclude wherever it goes. So as you can see, price has reached this level, but it has not hit our stop loss or the entry level of our trade, because we have break even this trade. We are waiting for the price to hit this target, and we would close our trade once it hits this target level. Right now, things might not be looking in your favor, but as I said, just hold on and let market play out and see wherever it goes, because we already have a stop loss level set. Let market either hit that stop loss or let it hit the take profit level that we have set. So here you can see our take profit level has been hit. So as I said, that even though we opened this trade on the 20th March, it concluded, as you can see, on April 5th. So it does take a lot of patience, but as you can see, the results are really amazing, because this trade has given us our risk to our ratio of above 125, which is really amazing. So as you can see, this strategy works out really well, and I would all the trades do not have to go that long. It just depends upon the price action that is happening in the market. So I would suggest you to go ahead and trade this trading strategy, and you can also turn off this indicator while you have taken your first trade and let that trade finish. Let that trade either hit your take profit or stop loss level, and then you can turn the indicator back on and you will be saved from all this jargon. So I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video. Thank you.